please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, good afternoon. You're watching Halftime Report. I'm Samira Abdi and with me is Nigel D'Souza. Hi, Nigel. Good afternoon to you. Well, for the market, not so good an afternoon. So we're down about 0.25% now in the frontline indices, and we're very close actually to the low point of the day. And if you look at the Midcap index, if you pull up the intraday chart, you'll actually see that over there things are not looking so good. So it's about 120 points lower on the Midcap index, but importantly, it's at the low point of trade. So clearly the Midcap index underperforming, and once again, it doesn't look like a great day to be in. An investor in the banking stocks.
That's right. Samira, a couple of days we had a good run. 190 points is what we put on in the previous two trading session. So today we have paused for breath. We woke up this morning to very positive global cues, and one would have thought, well, we're going to hit another half century today. In fact, we almost hit a half century just to kickstart trade. But from the top, we have seen quite a sharp correction. So the Nifty has come off close to around 50 points from the high point of the day. The Nifty Bank as well is getting a bit of a whack. And if you take a look at it, the 50 DMA, that's the crucial mark. That's at around 10,600 odd. The 20 DMA as well at that particular level. And that's why, in fact, we did see a bit of a U-turn from that level. Even the breadth of the market, you have more number of stocks now that are declining in comparison to the number of stocks that are advancing. The crisscross lines as well should come up for you on the screen. And that explains why the Midcap index as well is down nearly around 0.5%.
All right, those are your top stories. It's time now for movers and shakers. So let's talk about the big story of the day, which is that the ACC Ambuja merger has been called off, at least for now. Nigel?
Well, Sumera, not good news for both these two stocks, and that explains why, in fact, the stocks are under some pressure. What they're saying is that they're not proceeding with this merger for now, but they're saying at a later date, they'll be looking to bring both these two together, and they have cited various constraints, and that's why they can't go ahead. What they're saying for the time being is that, in fact, there is going to be a bit of a temporary arrangement, though they have not given details of that. That's in terms of sales as well as purchase of raw materials, as well as in terms of services. And they've indicated that, in fact, this will be, this will bring some benefit in terms of operations. Remember, they'll require shareholders' approval. So at least at that point of time, they'll have to put some details on the table. Now, just to rewind, in 2013, the parent had announced a bit of a, rejig for both these two companies. At that point of time, what they stated was that, in fact, ACC will become a subsidiary of Ambuja Cements. So 50% is the stake that Ambuja has in ACC. And that point of time, they guided that, in fact, the synergy benefits could be nearly around 900 crore rupees. Then in May 2017, they said, no, we're going one step further. After the rejig in 2013, now we're going to do the merger in 2017 itself. So, that's why the street, they were building up a lot of expectations. But the big question was, they already announced a rejig. Now they're announcing a merger. How much more gain can you get in terms of operational benefits? Why was it important? Brokerages, they expected nearly around 200, 300 basis points in terms of margin expansion if both of them do come together. But let's stack up the numbers. First, what they said is that 900 crores is what could be the synergy benefits. So that's a positive. But, Ambuja Cements, they'll have to use, the merged entity will have to use limestone from ACC's limestone mines. That could come at a cost of around 64 rupees on a per ton basis, and that would lead to a hit of around 150 crores in terms of operational profit getting hit. So if you're working with 900 crores, straight away 150 crores gets wiped out, and there'll be a one-time transition cost because of stamp duty. You'll have other transaction costs as well. That could be nearly around 500 crores, and CLSA has mentioned this in their note. What are brokerages saying now? Credit Suisse, they are saying that, in fact, the synergy benefits are delayed. It's a bit of a sentiment negative, and that's why they were neutral and underweight rating on both those two stocks. Deutsche Bank, they are saying if I had to choose between the two, then we'll choose ACC. Why? Because valuation-wise, it's cheaper in comparison to Ambuja Cement. So Deutsche Bank's note as well should come up for you on the screen. And CLSA, they are saying, well, the movement of clinker as well as cement, that's good enough for them. And that's why they have a buy rating on both those two stocks. The street hasn't taken it well, Sumera. Both those two stocks under pressure. But to be fair to them, from May 2017 till date, the stocks were virtually unmoved, while the Nifty is up close to 14%. So it's not that they were up 10, 15, 20% anticipating this.
All right, well, clearly not looking good for both of them at the moment, but Jain Irrigation is doing well in an otherwise weak market. Naveen, what's the news there?
Some bit of an acquisition for Jain Irrigation. So what the company has done, Sumera, is that through its subsidiary, that is Jain Farms, the company has acquired Innova in the country, in Belgium. So remember, Innova, what it does is it's exactly into distribution as well as into drying of vegetables. So this is kind of a forward integration for JN Irrigation, given the fact that the new chili plant for the company is coming up. So this will clearly bode well in case of the utilization for the company. Apart from this, the company has been a supplier for JN Irrigation for the last 15 years. Some bit of a forward integration for the company in line with the company's strategy, and that is the reason why the stock is up in trade today.
Okay, all right. We're getting some information that's coming from the industry. The government has set up panels of all PSB EDs and chief technology officers, I think. So that's some news that's coming in there. The new panel is likely to address the technology issues in private sector banks, and they've recommended a common operating procedure as well. The panel is likely to be tasked to submit their recommendations in the next 15 days. So that's something that, we should be keeping an eye out on as well. We'll try to get in, I think, Sapna. She'll fill us in with further details on those flashes. But I think Ritu as well is joining in. Ritu, the bad news continues for PNB. Well, just a month back, the stock was nearly 200 rupees, 197. Now it's on the verge of breaching 100 rupees. I think we have not seen that since the middle of 2016. Bad news continues. Hey, Ritu?
Absolutely, Nigel. In fact, it appears so in a late-night disclosure to the exchanges, Punjab National Bank has said that the fraud that they had already disclosed on the 14th Feb could go up by an additional $204 million, which is roughly 1,320 crore rupees at today's exchange rate, which means now that the total quantum of fraud could go up to 12,700 crore rupees, much higher than the 11,400 odd crore rupees that we've been talking about so far. So what does this mean? Number one, because we're talking about a larger quantum of fraud, more banks could be involved in terms of the liabilities that they've issued against these fraudulently issued letters of undertakings and foreign letters of credit. So far, we know that these are the banks that have been involved: State Bank of India, Canara Bank, Axis Bank, Union, UCO, as well as Allahabad Bank. Now, could there be more banks involved where the bank has detected additional fraud? Could there be more liability on some of these existing frauds? We do not know. So those details are still awaited. The second thing is the additional fraud amount that PNB has disclosed. This is almost equal to their FY17 profits for the entire year of 1,320 crore rupees. So it is quite a significant amount of quantum of fraud that we're talking about, almost equaling 50% of the bank's market cap, current market cap, if you look at the total quantum of fraud that is. The stock, of course, as you said, has been falling over 37% since the disclosure, and in the process, over 15,000 crores of market cap has been erased. But the biggest question really, what the markets want to know is this 1,300 crore rupees additional fraud the end of the matter, or are there more skeletons that will tumble out of the closet?
All right, Ritu, thanks very much for that. That, of course, remains the question that's on the market's mind as well. But Nigel, at one point, we thought that Graphite India and HEG, the good run there was over. But Jefferies doesn't think so. Yeah,
Jefferies doesn't think so. And I think a lot of those bulls on both these two stocks, they'll be very, very happy because the stocks are moving higher. But if you pull it up from the last couple of months high, these stocks are correcting nearly 30-35%. So today, yes, both those two stocks are up. But I think, we should pull up a 2-month or 3-month chart. Both these two stocks had seen a sharp correction from the recent peak. Yes, the 6-month chart. We're talking about the last 2-month chart. Any which ways, let's go on to Jefferies' note then. What they are saying that, in fact, graphite electrode prices, they are northward of around $10,000 on a per ton basis. So that's good. They're saying that Phillips 66, in fact, they're debottlenecking its refineries. They're going to raise production by around 15 to around 20%. Just to tell our viewers, in fact, that Phillips 66 is the world's largest manufacturer of needle coke. Jefferies goes on to say that they've estimated 80% capacity utilization levels for both these two stocks for the next fiscal, and they remain positive on the graphite electrode sector on the whole. They're saying that, in fact, valuation-wise, both these two stocks are cheap. And they're saying even if blended realization falls, that's if, in fact, there are some export duty that could be levied of around 20%, and that could lead to realizations falling by nearly around 10 to around 12%. They're perfectly fine with that, and they continue to maintain their buy rating on both these two stocks, and the target price as well should come up for you. Graphite's target price at around 1,135, and HEG 3,600, and this is what's given the bulls, on both these two stocks something to cheer after the stocks have seen a sharp correction from the recent peak.
Yeah, that's true. Actually, not that they needed any cheering in the last one. Yeah, but I guess.
Well, ratings agency Moody's has raised the red flag on affordable housing, says delinquencies are growing and are expected to continue into 2018. Mr. Sriram Kalyanaraman, the MD and CEO of National Housing Bank, joins us. Hi, sir. Thanks so much for joining in today. Well, the government has told you to start a fund under NHB for affordable housing segment. What is the update on that front with regard to the corpus, who will invest, and so on? Give us some details, sir.
The contours of this fund are still being worked out. The finance bill is yet to be passed in the parliament. Let them get it approved. The contours is, as of now, I would say this is work in progress. And we would let you know as soon as the things are crystallized in this front.
Okay. So now let's get to the report. Some red flags have been raised on the asset quality in the affordable housing segment. Your take on it?
See, you just heard, for example, one of the company's CEOs who was in the lowest of the lowest segment say there is NPA, but it doesn't get into loss rates because if it's a good harvest, the farmers come and pay you. Now, the lowest of the segment has always been a bit higher than the normal average of 1.5, 1.6%. So to say it's coming because of affordable housing trust is not a right thing. Yes, the lower income group always get affected by changes in economy, changes in agriculture patterns, so on and so forth. So expect a little bit of higher delinquency there, but at least from what we understand from the housing finance companies which work on this front, there is no loss rates. And this is not a new trend. It has always been, the low segments have always been showing higher trend than normal.
All right, so just hold on to that thought, sir. We just have to do a quick market check, actually. We have a few stocks that are getting a bit of a knock, and that explains why the Nifty has broken the 10,550 odd mark. GAIL has taken a bit of a knock. We have ONGC as well that slipped. But I think the reason that, in fact, we have moved to the low point of the day would be because one of the bigger boys, I think HDFC, that's one of the largest weightages on the index, and I think that's taken a knock, and that's what could have single-handedly brought about that 10 to around 15-point fall. Exactly, that's the stock that in fact has dragged in the index. In fact, now it's down closer to around 10 points, and it's accounting for nearly 25% of the total losses that we're seeing on the Nifty. So HDFC is the stock you should keep on your radar. The Nifty Bank, by the way, has slipped 220 points. But well, let's get back to the conversation we were having with the MD of NHB. Well, sir, with the GDP growth at around that 6% odd mark, a couple of housing finance companies are growing at around 30% odd. Are you comfortable with the same?
See, I would only see whether they are adopting to the policies, they are following the policies and regulations. Where they want to grow, what segment they are growing, what is the credit policy they follow is left to their board and to their management. Probably it only shows there is enough market in this country, which I have always been saying, that it is a huge untapped market and they are finding their segments to grow in.
So also, in this whole LAP segment, which is a loan against property, there's been some concerns which has been raised by ICRA, especially with respect to the self-employed category. High churning, viability, etc. have been in question amongst a lot of the industry experts. Is that something that you might be worried about? See, when the SME segment goes through a little bit of stress, for whatever reason, then the LAP, or the loan against property, which mainly constitutes, or the money would have gone to the self-employed group, would show some stress. Having said it, we are watching that segment closely, and if there is a very serious trend of alarming things, we would take necessary action.
Well, sir, final question before we let you go. Well, you have issued many new HFC licenses in the past, 2 to around 3 years. Don't you think this will lead to hyper competition and increased risk-taking? We're already seeing a lot of failures in this space from the recent entrants who are showing, now they're showing higher NPA, sir. Your view?
Yeah, let me clarify this. I have not relaxed any of the licensing conditions prescribed by National Housing Bank. All that we had done as a team is make it quite transparent. We do follow up with the other regulators where it is needed regularly. And we do upload, as soon as the application is received with the right papers, we do upload within our website and then follow up that process in a time-bound manner. The interest on housing by PEs, by various other people, is mainly due to the thrust given by government on Prime Minister Awas Yojana, and as I always said, the untapped potential of the housing market, especially at the lower segments in this country. So I think each one has to get the business model. Now, if somebody has got the business model wrong, they need to get it right. That's about it.
Well, let's hope they do get it right, sir. Going ahead, thanks so much for stopping by and in fact giving us your view on that interesting space. But by the way, the markets, they have slipped a tad bit. A lot of stocks are seeing selling pressure. GAIL as well has taken a bit of a knock in the last few minutes. We have Sun Pharma as well. That's now down nearly around 2%. But I think from the broader markets as well, you have a couple of these stocks that are taking a bit of a knock. Pull up Just Style. The intraday chart will tell you the picture there. Raymond as well has taken a leg down. And I think PC Jewelers at one point of time, after a while, that stock was holding with a gain of around 4%. Now it's holding with a gain of only around 2% out. So some nervousness, some profit booking. We have had a good couple of days in terms of a stock move, in terms of the Nifty move as well, but some profit booking today. Well,